What's up, everyone? I'm back again with another stock and see if I should add it to my portfolio. Now, if you didn't know, I'm building a bridge account for before I retire. And if you wonder why I'm picking dividend stocks, I'm picking dividend stock because of what this guy said in this video.
Never buy a stock that doesn't pay a dividend. That has been your advice through and through. Why are these stocks more attractive?
You look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company, I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked.
Why am I building a bridge account? Well, to make it easier for me to retire early again. That's the reason why. And the reason I am picking investments to own a stock is because of what Warren Buffett said. And this is what he said about a stock.
Buffett, the man with a net worth of over $100 billion, has a story to share. Here's what he did.
When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee. I think that was the classic then. Hundreds and hundreds of pages. And I read that whole thing over and over again. I read Garfield, Drew, I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year.
Why am I picking dividend? Well, I don't want to take away from the egg, so I want to be getting paid out. I don't want to take out money. I want to get paid in dividends to help fund me while I retire early. So this is what I think passive income is because of what this guy said.
The reason so many scumbuckets are making so much money is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero, and you put them into two places that have historically created passive income. Public markets, that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
With all that said and done, I am building this portfolio, and come with me on this journey. Like and subscribe to my video. And what are my requirements for my stocks I pick? Well, since it's going into my dividend portfolio, it has to pay a dividend. Number 2, it has to be financially stable. And number 3, it has to have growth opportunity. Now, before you start buying the stocks I have, I do have a different 401k plan, and I invest differently in that. This is my dividend portfolio, so strictly dividend, and I am picking stocks that has an overall good growth and not really worried as much on the dividend. So what stock am I gonna pick? Well, here's a video of what this stock does.
When I think of the Fastenal business model, I first have to think of growth through customer service, because that's what we've been about since 1967. And for us, what that means is we've worked to get closer and closer to our customer, because we believe that's the best place to engage with our customer. By getting close, it also allows us to do things that our competitors just can't do.
It's not just a box showing up at the door. It's a name of someone that you know, somebody that you can count on, and somebody that you should trust. And so what gets me excited, and what I see is in nationally, so many folks are running away from the customer And I think Fastenal today is running towards the customer.
So this is the company I'm looking at. It's Fastenal, and they make industry type of gear. So they deal with construction, fastener, safety, janitorial, tools, all types of different things. And I think it's really needed for the industries, for commercial, because at the end of the day, they need someone to buy stuff from. And I saw that they have vending machines now. So I was like, this might be a perfect chance to buy them. Now, I have to see more about them, but this is the company, and I already did my due diligence, but make sure you do your due diligence on the company and see if they're worth having. I like this company. I see them in a lot of places, and I don't see them going away anytime soon. So let's go into this stock. So Fastenal, let's look at the year to date. It's up 33.22%. That's pretty good. The 1 year, it's up 40.70. Really good. Still there. 3 years, it's up 87.11. Good numbers. 5 years, it's up 117.58. Really good numbers right there. It looks like it's on a good upward trajectory, but we can't just rely on a chart, because if you look recently, it looks like it's been going down. It might be the perfect time for me to buy them. So let's look at the dividend, see what it's paying in dividend. So it pays 1.84% dividend yield and annual dividend of 0.88. So how is the dividend growth? Well, it's a negative 70.53% growth, and they cut back by 0.18% last year. So it does pay dividend, but they're cutting back on how much they're paying dividend. And I'm going to look at the 10-year growth, and it looks like their dividend kind of just stables out, and they're not really increasing it. It looks like it's actually negative growth on the dividend payout. So, hey, this might not be the best for you if you're looking for dividend growth. So if you're looking for dividend growth, this isn't the stock for you, because it's been going in a negative 10.53% dividend growth. So let's go into the finance and see what's going on. So, like I said, I like using MSN. Why? It's because they tell me what each one they are, but I want to see how they've been doing from 2017, if they've been increasing their market share. And it looks like they've steadily been increasing their market share over the years. So they've been making more and more money, nice and steady. Now, let's go and see what's the gross margin. Their gross margin is 45%. That's a really good gross margin. And what is their net profit? 15.25%. I like that. It's had a decent net profit with a good gross margin. Now, I do like these numbers, so they look like they're financially solid, but let's look at the balance sheet, see what they've been doing. Well, their current asset is about 4.6 billion with the current and fixed asset. That's pretty good. And the current liability 687, and long-term debt's 125 million. And what I like to see is what they do with their debts. Long-term debt, they look like they've been paying off, which is really good. And current liability, they've been bringing it down. So they're doing pretty good. This probably the one of the better financial stable company I've seen. So let's look at the free cash flow. I can go into debt with all this other stuff, but I like to see how much cash flow they have and if they've been doing well. So in 2023, they had 1.26 billion and they dropped to 946 million. Now, why is that? They could have did some growth, some other things, but looking at this, it looks like they're financially sound. So it passes my first two requirement. Now, let me check and see what they did in the earnings. So Q2, they met it. Q3, they met it. Q4, they missed it. Q1, Q1 of 2025, they made it, and Q2 2025, they passed what's expected. Now, the analyst does say to hold this stock. And okay, it makes sense holding that stock. Let's see what investors are doing. So institutional investor increased by holding by 103% last quarter. So investors are coming into this: BlackRock, State Street, and Vanguard. That's interesting. And before we do everything, let's see what's going on. Who's been selling their stock? Well, it looks like their people are selling, and they might just be getting paid a lot. I really don't like seeing them selling their stocks because it makes it harder and keep reach the price. But at the end of the day, this might be part of the compensation. And it looks like they sell 35K, 49K, 85K, and 7K. A lot of stocks being sold every quarter, it looks like. And if I go back and look, do they sell every quarter? It looks like they sell every single quarter. So yeah, it might make it harder for the company, or they might know something about the company that I don't know. It might be something insider. And what they do is they make fasteners, they make things for commercial building, and they're building a lot with commercial wise, and it's based in the United States, and they have 21,000 employees. Well, it looks like a pretty solid company. Let's see what AI says about this. Revenue has grown, EPS. So let's go down here and see what AI evaluation. So the PE is 46.30. Well, that's way above the industry standard of 28.28%. So according to this, it is overvalued on the price. And I can see that. Now, earnings. Let's see how earnings is doing against their peers. Granger's 2%, MSC Industry, negative for Ohio, and Chart Industry. So it looks like earning per share is doing really good, and it's a 6 out of 6. Future growth, earning per share forecast is 6 out of 6. I agree with it. It looks like it's doing pretty good. Historical performance, it did miss a quarter. I can see why it's down. But if you compare it to its peers, yeah, it didn't beat Granger. It didn't beat Park, Ohio. But it's not bad. And financial health is 5 out of 6. I will give it 6 out of 6. I personally think it's a good stock. But AI gives this stock about a 5 or 4.5 to a 5 star. And I agree with it. Now, let's see any bad news on this one. I really don't see any bad news. So, what do I think about this? Will I add this to I think I'll be adding this to my portfolio. I need something like this in my portfolio anyways. And it looks like it's going to be growing pretty well. Now, before anyone says that this company is dying, it's dropping right now. Yeah, in the last month it has dropped, but I think it's going to be going back up. It might be a perfect time for me to buy the stock for cheap. Now, the 1 year, 5 years, the number says it's been doing pretty well. Now, I don't use the graph to indicate if I really want to buy. It just kind of shows me that how much it's been doing. So it gives me a history. What I'm really impressed is the finance. It has a nice steady growth with a good profit margin, and they take home money. So they consistently get 15%. Now it does pay dividends, so it meets my requirement. So I will probably pick up some of these shares. Will I pick up a lot? Probably not. Probably like $500 or $1,000 worth, just to, I can buy it and pay attention to it. But yes, I think I will be adding this to my portfolio. Let me know what you think about this. Like and subscribe. And if you're going to add this, let me know and comment down below.